Hey, what's up all my trader homies? It's your boy Kevin from Touchdown Trades, your trading BFF, your stock market bestie. Today we're going to be talking about day trading strategies, and I'm going to show you the best day trading strategy that you can personally implement into your trading. New traders are constantly looking for the next best strategy to help put them over the edge and help them become consistently profitable day traders. Well, there's one big problem with that, and that is only one strategy, only one day trading strategy actually works. And that is buying cheap and selling high, or selling high and buying back lower. And I know you're probably thinking to yourself, no Kevin, calm down and give me a minute to explain and I'll show you what I'm talking about. Traders are taught by the trading community and so-called trading educators to trade breakdowns and breakouts, trade made-up trading patterns and setups, and use made-up fancy indicators that don't actually work. And this causes more than 90% of traders to lose money. It simply does not work. This is a very stupid and avoidable mistake because traders aren't trading the only day trading setup and strategy that actually works. The only day trading, swing trading, or investing strategy that works is buying cheap and selling expensive. I know it sounds simple, but it really isn't that simple, but it's also not complicated. So let's jump into the charts and I'll show you a few examples of what I'm talking about, and I can also show you how you can implement this buying cheap and selling expensive strategy into your own personal trading. Alright traders, so here I have a chart of this WKHS pulled up, and this is one of the tickers that I'm going to use as an example to show the strategy that I'm referencing. So this thing has made a huge move and basically looks like you could have bought it anywhere, day traded this with an entry at any time of the day and made money, but that's not true at all, because here's a prime example of what I'm talking about and the strategy that I use to implement in my trading that has made me a consistently profitable day trader. And that is not buying breakouts, not buying when it's expensive, and waiting until you can get a good deal and then sell it as it rips back up. Here we have WKHS was opening higher. It gapped up from the previous day and it ripped up. So you had the pullback, and this would have been a time to get in. This consolidation area here. And then it rips back up. Most trading educators would have been teaching to buy this break of the previous high. Buy the high of day break and look for a rip up. But when you're buying that, you're buying expensive. You're buying something that's more expensive than you should be paying for it. It's just that simple. It's the same as any concept. If you're looking for a new TV, Best Buy is selling it for $40 is $400, and Target's selling it for $800, you're going to buy it from Best Buy. It's not complicated. We want to get good deals on these stocks that we're looking to day trade, and how do we do that? Is not buying the high day breaks. It is buying pullbacks into support, pullbacks into previous consolidation areas, previous volume support. We can see back on this day, we had a bunch of pre-market volume traded in this area. So after we had the failed breakout, the failed high day break, it pulled back into that previous pre-market consolidation area and it started to hold. That is your entry, and you sell on the way back up. You do not buy the high day break. Look, we also had consolidation here in the first 15-20 minutes of the market open. We had consolidation here, so we have it's obviously a valid support area. So you could either bought in the pullback into that level, a beautiful wash into that level, or you could have waited for confirmation on the VWAP break. You're still getting a better deal than you were up here buying the high day breakout, and it's just a cleaner trade. And if you try to buy these high day breakouts, it may work for you 1, 2, 3 times, but over the long run, you will not be profitable. Another example on this WKHS is here on Friday. If we zoom in, you got a break of the pre-market highs here, and I guess that breakout trade would have worked You didn't get extreme resolution, you just got a little spike. But then it came back down, and then it looks like it's going to try and break high a day. And you know you had the breakout traders piling in long in this area, looking for the break of the 2290 level, and it fails and just sells off the rest of the day. And traders were probably adding into their losers and just took gigantic losses, and that's why it doesn't work. Another thing I want to talk about, I'll show you one more example, one more ticker, and then I want to talk about stop losses. All right, so the second example I want to go over is this GNUS made a beautiful move on Friday. It was up, I believe, 50-something% on the day on Friday. So this is a 1-minute chart, and it looks like you could have bought anywhere and made money. But that's not true, because the breakouts are so quick. This is a 1-minute chart. If you're buying the breakout of this consolidation level here at 320 area, you're looking for a move higher than that, right? You're looking for a bigger breakout, but you don't get it and you get the wash. The time to buy is not the break of 320. The time to buy is the washout. The time to buy is this washout. You get the breakout over 320, and then you get the washout. You buy into that washout, and you're risking off this prior consolidation. Another example up here. You're ripping up. You do get the huge breakout, but then look, if you're buying into that, you're just stuck in that wash and you're dead meat. I want to talk about indicators real quick. So indicators should not be used as like I'm buying now because it's coming back into VWAP, or I'm getting short because it's into VWAP. Indicators should just be used for relativity, telling you whether it's cheap or expensive and whether you should be looking to take either a long trade or a short trade. What I mean is, okay, look here. We're so extended over the 9 EMA here at 390, testing 4. You know you had traders looking at this, trying to buy it for the $4 break. Not me. I looked at it and I was like, we're extremely extended. We may get that $4 break, but I'm not buying this up here, because if it's a trap and we don't get the $4 break, we're so extended over these moving averages in VWAP that we're going to have an explosive move back down, and I don't want to be caught in a halt going down or some just extreme flush to the downside. So I stayed away from it, and thank God I did, because it washed hard. It washed from 4 to 320, so 20% in just maybe 15 minutes. And those traders who bought that $4 breakout, they lost their asses. Okay, so the last thing I want to talk about in this strategy is stop losses. I know this is going to sound crazy to you. Don't use hard stops. That doesn't mean you should not respect your stop loss. All I'm saying is don't use hard stops. And what I want to show you is, okay, for example, all right, Thinkorswim, GNUS is breaking out over this pivot here. You don't want to buy the breakout because it's just stupid, and you don't want to buy strength. You want to buy weakness, sell strength. So you watch it break out and you're waiting for a pullback. So you buy right here with a stop at 275, okay? Don't stop out into weakness. Wait for this thing to pop back up like it did right here. So it pops back up, and if it breaks that low, then you got to stop out. But give it a chance to pop up and sell into strength. And look what happened afterwards. It ripped. So when it breaks your stop, give it a second to pop up. If it doesn't give you the resolution and it breaks that prior low, you have to stop out. You got to respect it. But try to sell into strength anytime you can. I cannot tell you how much money that saved me over the years of my day trading career. Not selling into weakness, not panicking out of your trades. Retail traders, if you're panicking out of your trades, it's because your position sizing is wrong and you're in the trade with too big a size. If you're able to hold your trades and just wait to try to sell it back into strength, even if it's still losing trade and you're selling back towards your entry, it can save you tons of money. Just some food for thought there. If you guys got anything out of this video, please do me a huge favor, hit the like button. So if you guys got anything out of this, hit the like button for me. Do me a huge favor, hit that like button. Also subscribe. It means the world to me if you subscribe. I'll catch you guys in the next video. Peace.